and I'll post that recording in a minute. But yeah, let's get it. So first of all, let's start with Bitcoin, of course, and then after Bitcoin, we'll move on to everything else, right? So for Bitcoin, very simple. I'm not even considering the horizontals fully right now. I'm mainly interested in the diagonals. That's where the juicy price action is. So in terms of diagonals, what do we have, right? Let's build it up. So some of you haven't got to these yet, so it might be too much if I put everything on at once. But first things first, the reason we had this pullback here is because the warning was given, right? We streamed about this. I said one of the only things that could give us a slight pullback is the fact we have SFP'd once again by doing this weekly close in like 19th of May basically. We had SFP'd once again the macro 1.5 in terms of your macro fib channel, right? So you can see double bottom here, you have two tops there, so this is a completely valid channel, right? In fact, you know, that higher low, that rejection to higher low, that rejection to higher low, everything's accounted for, right? The front run of the liquidity rate was your the front run of a range extreme, right? The front run of a range extreme was the 2024 top, and therefore if you get the extension of that, now that you've gone above the one, right, what we've done is we've hit the 1.5 and we've SFP'd it, right? Not once, not twice. You had a front run, you had an exact hit, and now you have an SFP. So this 1.5 is clearly very, very strong resistance. Now, that's the reason why we talked about that head short, right? And what did we have going into here? We had that daily buyer-seller zone right over here, right? Not just the daily buyer-seller zone, we also had the mid of your daily order block, right? So here's your order block. The mid of it was right there. On that retest, we hit it. What were we waiting for? We were waiting for the distributive structure, the inverted smiley face to come in, right? So your initial resistance was right over here. Your radon liquidity was just above, and then your lower high, once again, to reconfirm resistance, was right over here, right? That was your opportune head short, and that's the one you guys should be in if you follow the triggers from the stream, right? So I'm still in the head short there. I'm not going to take any profits yet, right? I'm not really taking any profits yet, simply because we're still using this diagonal as resistance. If we use this as resistance now, that can lead us to do this, right? And like I've said, I am completely okay with Bitcoin going down, okay? I am completely fine with Bitcoin going down all the way down towards 90k, and the reason for this is, like we mentioned, as long as we do not breach the 90k low, we are going to be putting higher time frame accumulative structure in, right? Hopefully you can already see that. You have massive support, you have a massive rate of liquidity, but we know we have higher time frame trap traders. They've already been forced to cover. And now if you can reconfirm that as support, that makes the chart look even better, right? So this will, for people, people will be panicking if they see this, but just again, like, that's why we don't focus just on the scalping mindset, right? That's why I always start with the swing mindset first. With the swing mindset, you have a cumulative structure even if you have a harsher drop on Bitcoin. Now, do I think we're going to get that drop for definite? No, not yet, right? The only reason I will say we're going to get that drop is if I actually see the conditions being met for that. And what's the conditions for that right now? If you take your macro fib speed resistance fan, right? And I'm talking, again, remember, the most powerful fibs always come from the last completed wave structure, right, in my system. So if you take the last macro fib speed resistance fan, right? And again, the bottom was just 87886, very beautiful number. You guys can know why. Yes, we're below that. You're below the key level there right now, the 0.5, right? However, if you take the initial fib speed resistance found from the last cycle as well, which is from this low to that high, which is why we know where we topped out where we did, that's the 1.618, right? You rejected off the primary projection in terms of the diagonal. As long as you're holding this zone, right, you're not turning it into resistance, I'm not going to be talking about lower, right? If I see that break down to this entire zone being resistance, then yes, my next steps would be, okay, we're probably going to go down and get that smiley face, because the last thing we can get from the last completed wave structure is the downtrend diagonals, right? If we take the downtrend diagonals on the yellow, then we have a nice area where, in time frame wise, you know, we're chopping out at a very, very key level. However, should we lose this, you can see as long as we hold this cluster here, right, we are completely fine still. If you hold this cluster here, that sets us up to go even higher, right? So I've already mentioned this, but I'm going to say it again. I've got two theses right now. The first thesis is a blow off top, right? If I want to see for my blow off top thesis to be validated, I do not want to see any sustained breakdowns from here. Even if you do get one, grab the liquidity, reclaim and go, right? And if that happens, the blow off top is we don't get that big of a pullback here, right? We do not have a choppy summer. That's my triggers for right now for a blow off top. If you don't have a choppy summer and we go, like literally we put a new, like, you know, I'm talking we put a new high in on Bitcoin by the end of this month even, right? If that is what we're going to go towards, then if I open up Bitcoin here, my blow off top targets on that high, okay, it's between 121 to 132k. For me, that'd be the blow off top. And then if we start getting weekly bearish divergence, monthly, we see inverted smiley faces coming in, so on and so forth, then that's where you'd be looking to build risk managed swing shorts on Bitcoin, right? That's it. For now, these are the targets where I'm going to look for weakness. This does not mean I'm limiting. Okay, I do not execute on limits, right? Unless it's spot. Even then, I'm not fully executing on limits on spot. But especially with leverage, I do not execute on limits. You guys know this. I want to see confirmation, my thesis being validated before I manually enter. I do not care if I don't get the exact top or the exact bottom. Okay, I'd rather have the confirmation from looking at order flow, right? From looking at the actual structure, from looking at the interaction between buyers and sellers to confirm my thesis, right? I need that confirmation, right? So that's the first thesis, which is a blow off top scenario. If we do get that bigger pullback now, right, and you know, let's say we have chop to the end of June, maybe even midway through July, if we're sat here by right around the midway of July, then I think this leads us to a normal cycle scenario. And for a normal cycle scenario, which we're talking about, is not going to be a blow off top. For that, I think we actually, I don't know what I just did. Let me just Control Z. For the normal cycle scenario, I do think we push higher. I'll be looking around 152 to 165 for now. I'm not going to give targets higher than this for now, just because I don't want any of you guys to be sat there focusing on some extreme target, thinking we have to hit 200k. We don't need to do anything, right? We've got 4 key levels right now. We just analyze price action on the higher time frame once we get there. Is aggressive buying rewarded or is it not, right? Do we see buyer absorption or do we not? Do they get flipped to support, or do we see, like, you know, anytime buyers try to get above the passive sell wall is too great? All of these are the kind of signs we're going to be looking for around these individual levels to then give us a thesis, a better idea of, okay, do we look toppy or not, right? Especially higher time frame divergences, so on and so forth. But if we get a normal cycle scenario, and again, for the normal cycle scenario, what I would want to see is a pullback towards 90k even, right? To give us that macro accumulative structure. If that happens, then that accumulation, in my opinion, will send us higher than just 120, 130. I'd be looking for 150 to 160, right? We're going to have intersections some point up there. I'm not going to do intersections in this stream. It's going to take too long. But this is the key thing here, right? This is the same level we've been looking at all this time. The same reason we talked about why this was an area to like take profits, right? The same reason we talked about why, as long as you're below this, I don't want you guys having serious risk exposure. But after you get above it, that's when you like up your ante basically, right? Because as long as you're above this, you're above not just key levels horizontally, but you're also above key levels in terms of levels that have stayed with you over time, right? Now, these are levels that have been validated since 2020. Right, the first one being 2021 peak is when the white lines came in, and then the second 2021 peak is when the black lines came in, and then once the downtrend ended, that's where the yellow lines came in. Right, so as long as we're above this on the macro, we are fine. If we lose this, that's when I'm gonna be a bit more like, oh damn, this doesn't look good, right? Because if we do go and lose this, then we've lost the actual accumulative structure, we've lost an intersection, and the next key intersections would be down towards 68. So then I'll be looking for a retest, sweep these lows if we lost that, right? That's what I really want to see on the higher time frame. If we are to lose this zone and we go for a normal cycle scenario instead of a blow off top, then as long as this level here is held, I'm completely fine, right? And this is why I am, like I said, I'm 80% spot right now, 15% swing longs, and literally 5% for anything else. I'm not focused on scalping for this reason, right? And the reason I'm not giving regular scalp trades is because why waste your time? Right? Why waste your time looking for these tight range, lower time frame moves? Like if you're going to get a good hedge off, be my guest. That's why this Bitcoin hedge was given here, for example, right? But why look for lower time frame moves here, right? But you're bound to get chopped out on the lower time frame when risk to reward wise, right? Not just in terms of horizontal levels, but also in terms of time, in terms of energy expended, just staying in front of a chart, babying a trade is so much easier, right? If you were to look at any single altcoin right now, you look at AVAX, right? You look at Say, you look at Aptos, right? It's so much easier just at these areas just buying and holding, right? Because you being sized properly in trying to like run the range highs, that's where you're going to make most of your money, not trying to trade like a 30-cent range on the lower time frame, right? I'm not saying don't scalp, and I'm not saying like don't leverage trade, right? I'm saying right now there's a time and a place for everything, right? And at the moment where you currently are in the charts massively favors you just not getting chopped out, not losing 1%, 2%, 3% of your pool on a regular basis, dwindling your supply down when you could just buy and hold. Invalidation triggers are so clear. If you want tight invalidation triggers, if you start closing below $4.16, just cut your spot bag and buy lower. If you want a DCA, you would position size accordingly, but then what you do is you'd maybe enter some here. If you get a raid, you enter some more there, right? So depending on how wide you're willing to hold it, how long you're willing to hold it, your entry percentages might be a bit different. But the main goal here now is understanding that there is way more liquidity to be taken to the upside than there is to the downside, right? Especially if Bitcoin does keep on pushing up higher, right? And you're talking seasonality, we're talking it's the summer, right? Even if sell in May didn't really happen, right? So if the strength comes in from Bitcoin and if bullish news starts to come out on a higher time frame, no one can predict when it comes out, but when it does, like I said, you guys think that it's impossible to get to $14, but I would have you remember, just go back to last cycle, go back to any shitcoin, right? Go to the 3 months, the 2 months, the monthly, and see on average how much returns you were getting per candle, right? You go on any shitcoin that was trading last cycle, 2021ish, and you see you're gonna get like 500, 600% like 2-month candles, right? 400, 500% monthly candles. Even if you don't get the exact same returns, even if you get only 300%, that is what you're trying to capture with size. Okay, because people almost go into a full sense of security because prices sat here for so long, I've got time, and yes, you always have more time than you think, but at some point you do run out of time, right? And you're staring at, for example, Aptos today at $4.91, right? If all of a sudden you wake up and you get a 40% daily candle, right? Things start absolutely popping off. You start getting 40% daily candles. If you didn't enter here, you are either you entering here is not going to be a plan, basically, right? If you were not willing to enter here, what makes you think you're going to enter here with anything that resembles a trade plan, right? You're not. If you enter here at this point, that wasn't a trade anymore. You didn't enter when it was manageable to do so. You entered after you saw a big green dildo, and that, my friends, is called trading with emotion, right? Doing size ups after a big move up to a trend shift, that is fine. That is different because you still pull the trigger when you needed to, not when everyone else is looking like they're going to pull the trigger, right? That's the point I'm trying to make here. So just rotating back to Bitcoin real quick, I think Bitcoin looks absolutely fantastic still, right? Yeah, sure, on the medium lower time frame, maybe we're having a little bit of a stalling, right? But like I said, even if we do get a bigger flush down towards 90k, as long as we do not lose the cumulative structure, I think our normal cycle scenario is still in play. Okay, I don't have like a quote-unquote extended cycle scenario. If you fail the normal cycle scenario, then I would be more likely to say, if you get another macro lower high now, we just take shorts off that, right? Because I'd be thinking, okay, we're probably going to get a way deeper pullback, maybe like a failed cycle scenario, and then we just kind of roll it on to next cycle, basically. But the chances of that happening right now, I just don't see it. Right? And of course, this thesis is going to be updated as more price action comes in. But based on the price action that we do have, right, that's what I'm thinking. Okay. So let me check back to the chat, right? And then we'll take it from there. Yes, up, right, bro. How you doing, man? Hope you're well, brother. John, nice to have you here, bro. Right. Okay, so that's Bitcoin. Let's take a look at Ethereum next, and then we'll just go straight to altcoins. Okay, so Ethereum. There's a reason I've been telling you guys not to take plays within this range, right? Or rather, not to take higher time frame bids at this. If you're gonna scalp it, that's a different story, right? But if you're gonna higher time frame bids, because this is not a significant level for me. Okay, so you add a monthly fair value gap, right? You're chopping around. The next significant thing that's going to happen is if you do get a retest of your what's it called? Your key inflection area, right? That's number one. Or number two is if you go and take out the mid of your historical price range, right over here. Those are the two significant levels. Okay, you've already taken this one out, the monthly fair value gap mid. You've taken that out already, so that one doesn't count anymore. If you can flip it, that's great, right? If you can flip it, that's great. Otherwise, that doesn't really count anymore. So Ethereum still on the higher time frame. It's there's nothing much to be done here, right? There's nothing much. It looks good. Ethereum definitely looks good, and this is the thing, right? Everyone was absolutely shitting on Ethereum, and now all of a sudden we're putting how many? One sec. We're putting 1, 2, 3, 4. We've got like 8 weekly green candles within the last like 10 weeks, right? All of a sudden things start looking really, really bullish. Everyone's going to jump in. I do hope we get this range eventually for a higher low. If not, like I said, like it's what it is, right? I'm positioned. If we flip the monthly mid into support, for example, then I'll just add some more there. If you go and flip this into support, like that's fine, right? But Ethereum looks very, very good. If you look at the order flow for Ethereum, right? And hang on, let me change this to the higher time frame before I do anything. 500 ticks for higher time frame, and we're going to go to Ethereum here. Here we go. If you go to anything like the weekly, the monthly on Ethereum, like we said, that seller absorption was very, very telling, right? That was the low. After that seller absorption is what's given us this big move up and aggressive buyers. So let's take a look at this. Do we have aggressive buyers stepping in? No, we do not. So even though we have a nasty candle here, right? Remember, you're not going to call this absorption straight away, okay? In fact, let me just do this so I don't have to zoom in as much. There we go. Okay. So was there buyer absorption here? To an extent, yes, because obviously longs did come in, but the longs were not the ones that had the edge here, right? We had 15.22 million volume conducted last week on Ethereum, and sellers are the ones that had the edge, right? Out of the 15.22 million volume conducted, we have negative 673,980 on the aggressive seller side. Remember, this is Bybit perpetual, so this isn't spot, this is perpetual contracts, right? But if you go to the spot chart, it's gonna, you can do the same analysis, right? So this is a nasty candle, yes, but to me, this isn't like, you wouldn't be screaming, oh, buyer absorption looking at this. This is just straight up seller aggression being rewarded, okay? So I think it's good that we're trying to get above. If you can close this week in 4 days above previous point of control and ultimately above previous value area high, then this damage, in my opinion, gets outdone. We push up higher on Ethereum, right? However, if by the time the weekly closes, you go and you, for example, what you can do right now, if you want to take some scalps, is you can go and put just a line down where your value area high is, and the lower you tick, the more accurate this will be. So I'm just going to put it in the mid, and if you just set some alerts up. If you start seeing this turn to resistance, take your scalp to swing mindset shorts, okay? Otherwise, if you can close the week above this, then all this seller aggression, again, it's not going to lead to anything. If they didn't take profits, they are going to be stopped out. It's going to move back up higher, right? So we're going to go and probably take those imbalances out next to the left, right? Here it is on Ethereum, this, and just carry our trend up, basically, just grind up. But I would, like I said, I would love to see one big flush on ETH, shake out all the late leverage longs, basically, right? And then absolute up only after that would be amazing. But I don't know if we get it, because again, it's like sellers have been trying to push price down right now. We can see on a week-to-week basis, they're just not being rewarded. Aggressive selling is not being rewarded, not right now, right? So you can go ahead, you guys can pull this up. I know some of you haven't done the advanced yet, so we haven't moved on to the footprint charts yet. But if you want to access it and you have premium trading view, you do it right from over here, okay? It's nice TradingView have added this. Before, if you wanted to do any sort of order flow, you'd have to use ExoChart, you'd have to use ATAS, you'd have to use CoinAnk, right? But now, TradingView, you can pretty much do everything in TradingView. Sure, it's not as like as polished, let's say, as some of these other order flow platforms that have been out for a long time, but it's only a matter of time, right? Once TradingView perfects these, it will literally be the go-to. Like, it's already my go-to like platform anyway, but you literally won't need anything else, right? But yeah, so that's Ethereum. Again, Ethereum, very, very nice. Let's not forget the higher time frame context on ETH, right? What's the higher time frame context on Ethereum? We've bounced off the key inflection area, right? And we are once again accepting above key inflection area. So our next key level is at 2,873. Above that, it's at 3,166, right? So we've got a nice little range here on Ethereum. If the weekly closes above, or if we completely outdo what the sellers did there, then I will be just adding even more size to ETH, basically. Like, I'm already positioned on this, but just adding more size. Because ETH honestly looks good, right? You're literally compressing a cumulative structure to double bottom at the mid of your, this is like historic, right? This is, if you go back to the weekly and I look to the left, that's from your 2018. So from that 2018 low, right, up to that 2018 high, that's the mid of that impulsive range, right? You're flipping that into support, right? Not just that, you also have your key inflection area mid, right? So it's, even in terms of now historical price action is significant. So we can see anytime you're above this, you expand to the upside. So we can't be surprised if he literally just does the same thing again, right? we've hit the 786 on the retracement. So if if that is it, which I think it is, if that is it, then minimum A, B, C 786, the D point takes you to 4,776.5. Okay, the 1.272. Now if you take from this left, you have XAB. That B is a 786, right? C is a 786. A 786 at a minimum takes you to the 1.272. So your butterfly takes you to 5,953. Now there's a chance if you exceed past that butterfly, you might get the hop, which is at 1.414. If you go to the 1.414 and all the ratios are still within parameters, that will give you a new target on Ethereum, potentially this cycle, right? Potentially, because we're going to take it level by level, right? All we can do is try and see where would the targets be. I hate it when this happens. Just got to zoom in even more. 1 second. Lock that in place. Coordinates 6,518. So a Moonboy target this cycle for me would be 6,518. This is the butterfly 1.414, i.e. your hop. Okay. And there's this one here. There's this one there. And of course, we also have from ABC, that's a 786. I know we've wicked a bit lower, but I'm taking it as like on the higher time frame. Where was the candle body closes? What was the level that was respected? Well, the check back happened at the 786, right? So I'm taking it to the actual ratio itself. 786. If the 786 is respected, you go to the 1.272 next. So you have this nice PRZ here. Number 1, number 2, number 3 right now, right? So we can't be surprised if ETH hits, if ETH hits these, right? We cannot be surprised whatsoever. Okay, so I'll keep checking back to the chat. Yeah, for sure, brother. That's what I'm hoping happens, right? ETH has just been, everyone's been, everyone's no one's going to be interested in ETH. No one has been. Everyone's been shitting on this entire way down. Narrative was in the gutter, and now if you can, all of a sudden, if no one's bid this even on the low, they kept thinking it's going to go lower. Hated rally incoming. I can see that happening, right? So that's Ethereum. And again, if you're overwhelmed, you're like, oh, I'd love to have some, I just don't know. Just buy spot, okay? Just buy spot and hold, because even from where we currently are on ETH to your first target is a 78% pump. But if you get these extensions, it's going to be more than a 2x, okay? So yeah, ETH looks good, and your risk management is easy because you're saying, okay, if you buy spots here, right? How would you cut it? You'd cut it if that mid is lost. Hopefully that much is clear. Okay, if that mid of the key inflection area is lost, you start closing below. Just cut it and buy again when either when the mid is flipped, or if you go back down to put a high low somewhere around those lower levels we talked about, right? 2,100, so on and so forth, to put that smiley face in. Just rebuy. But Ethereum, it looks very, very good. Okay, if you look at the last monthly close on ETH, absolutely ludicrous. That is a beautiful, beautiful monthly close. Okay, you're above your previous month point of control. As long as you're above that, you're gonna go to the value area high. And if you get above this, it's these. You're gonna go to 3k ETH. It's gonna happen, right? You're hearing me saying it right now. It's gonna happen. If you get above this point, if you can basically find this as support, the previous month value area high in terms of fixed range volume profile. If you can make that into support, you are gonna get 3k ETH. It's gonna happen. That's where your next monthly imbalances are, right? Sell side imbalances. So ETH also looks very, very good. Actually, I've not looked at log. We can look at log. Hang on, I've got log target. Yeah, I remember target, bro. Nice, brother. Yeah, we can look at that in a minute. XRP log. Let's not look at that for now. Let's move on to Ethereum. Just one pull. Let me turn this off. Coming up to a front run of a range extreme, but on log, if we were to take the last completed wave structure, the last completed wave structure on log is going to be from this low to this high to this higher low. So we can see we've had a 382 rejection. Okay, I mean 0.5 for now, right? I don't think 10k ETH happens this cycle. If it does, even better, great, right? But for now, yes, there we go. 0.5 is what I'll be looking for that top. Maybe flip this into support and then something like that, maybe, right? But what's obvious is we need to get above the 382. That's what we've been double top at for now. Again, what was this? Front run of your range extreme, right? So we've seen the price action that we want to see here. We just need that follow through to the upside. Okay. So That is Ethereum. Let's look at Solana next. Solana, right? So the daily yesterday for Solana was looking extremely good, but it closed very, very bad, right? So when I was looking at this, when I put that chart in, the actual buying pressure coming in was great. They were being rewarded, but I checked back again at the end of the day, massive SFP. And then I look back at the Sol chart, and would you know it, was it in the charts? And the answer is it was. If you take a look, let me switch this to 90 ticks for LTF again. Let me just wait for that to update, right? We're interested in this, okay? So if you go to the hourly for Sol, and this is why footprint charts are so powerful. This, okay, hang on. No, let's move this back to 500. Okay, what is wrong with you? What are you doing? Give me, I want more resolution. Okay, hang on, let's do 30. Low volume problems right now. 10. They're much better. Okay, so what I'm interested in, was there a sign that the sellers had actually taken over on Solana before the actual dump happened on the daily, right? And the answer is it was, because this is yesterday. Okay, if you take a look at this candle here, it's beautiful. I wish I'd spotted it. I was busy, I didn't spot it, right? But here you go. This is a sign of seller absorption. Okay, right over here, or rather, sorry, buyer absorption, not seller absorption. What do you see? You see 716.6 thousand in contracts. Okay, 716,600 basically, right? And overall delta is 107,790, meaning the buyers had the absolute edge in terms of executions. However, does the candle reflect it, or do we have divergence? And the answer is we have divergence, right? Because what we're saying is, in the face of all this aggressive buying, Solana closed with a red candle. You closed way below where you started, so you pumped into sell side imbalance. You can see that, you can literally see the imbalance in terms of buyers versus sellers, right? So over here, for example, on the hourly, we have 9k versus 550, 18,000 versus 3,000, 8,000 versus 2, 12,000 versus 3, right? 3,000 versus 749. So there was way more aggressive buying happening here at the top than aggressive selling, right? And yet, what this candidate is telling us is, in the face of all the aggressive buying, we couldn't push through our key area. Right, remember, this is not passive intent. This is aggressive execution. These are orders that are actually placed, which is why I love footprint charts, right? It makes trading, or rather, it makes navigating the trading wheel so much easier, right? Because you now have an actual proper look at buyers versus sellers, supply versus demand, like aggression versus passive versus active, basically, right? And you can see, are they being rewarded or not in terms of aggressive trading? Because the order book, people always look at the order book and call themselves order flow traders. Remember, looking at the order book doesn't make you an order flow trader. Okay, if anything, it makes you manipulate it, because the order book is so easy to manipulate, right? So with this, there is no manipulation, because you're seeing orders that were once someone hits market buy or market sell, or someone's TPs or stop loss are hit, right? That's the only thing that shows up. So only trades that have been executed. You cannot manipulate that data. Okay, so what you see here is aggressive buying going in, but a complete failure to actually follow through from the buyer side, meaning the passive sell wall was too great for the buyers to push through. Okay, so we had the hourly seller absorption. So as soon as you see this, right, and then you see basically that it's closed like this, right, your confirmation candle, you can literally just take a short base of that, put your stop loss somewhere above the highs of your candle, and then you're looking for initiation. Initiation came right over here. What's initiation? Is after you get your absorption, right? If the following candle then confirms your directionality, this one did. So absorption was buyer side, buyers got absorbed. We've got initiation to the downside, right? That all but confirmed that you're going to go lower, right? And then after that, we can't be surprised if you do get a move down to your next imbalance. Where's your next imbalance? It was all the way down over here, right? So basically a 3RR trade would have been hit from this, right? And again, this is on the hourly. If you then time frame align the hourly to the 1 to 5 minutes, even better entry, so on and so forth, right? But the sign was there that Solana is now maybe topped out for the day, right? You do this, you know, you look at TPOs, for example, you look at market profile, right? And will I be able to do this on the hourly for yesterday? What did we have? Oh no, because it's a 24/7 market, so this is going to absolutely mess up the data. But that when the high came in yesterday, right there, right, it's 3rd of June, right there, when the high came in, right, 3 o'clock, right? If you look at the 3 o'clock candle, what do we have here? Again, only one person has got to this actual lesson so far, right? No one else has, so this is going to be alien to all of you. What we're looking at here is we're looking at time, price, opportunity plus volume profile. Okay, again, we're looking at order flow here, right? And this is based on time. What we're saying is we have excess going into the high of the day, right? This is euphoric buying. And yes, that is what you want to see. You want to see euphoric buying to push price higher, but that euphoric buying went straight to your value area or your point of control basically from Friday 30th of May, very key level. If the excess are now taking you over, that would have been great, but it didn't, right? You are now way above your current TPO value area, right? You're way above that. And you've rejected off a key level, which is your point of control from your next available key level here. So we have aggressive buying, right? There was hardly any time spent in this. There's only one block here, meaning there was at maximum, there was only one 30-minute session within these highs like being traded. Look, volume's pitiful. So when you now see that mixed in with the fact that all that euphoric buying has led to buyer absorption, you now have a complete picture, right, of the fact that sellers look like they're about to take control here, take the reins and drive price lower, right? So that sign was there, but I was busy, right? So I couldn't update you guys on this one. I was busy, so I'm not in the short either. Otherwise, I would have absolutely shorted the hell out of this, right? You can confirm. You can even look at this as a distributive structure around down a lower time frame, because you would have a lower time frame retest and then down, right? But yeah, this was really nice. It was there. The signs were there, right? I wish you could set alerts on the actual footprint chart itself. You can't. You have to draw lines on. But just drawing lines on isn't going to tell you if buyer absorption or seller absorption is taking place. So maybe I'll if I ever have loads of free time, maybe in the next bear market, I'll try to code it in, maybe, right, if I can. That'd be like a little passion project. But otherwise, that was there, right? In terms of now order flow, the fact that the moment that the buyers are now overly stretched out and not being rewarded was visible if you looked at across market profile and also the footprint charts there. Okay, I know, like I said, many of you haven't got to this session yet, but that doesn't matter because we will get to that session at some point, right? Took it. Oh, that's a great entry. Nice one, bro. Amazing work. Yeah, no, that's great. So yeah, fire. W's in the chat. That's a good entry, bro. I completely missed that. I would have taken it if I'd seen it, but yeah, I was at my restaurant at this point, so. But yeah, it's there. So that's Solana, right? So just wanted to look at that. Do I think Solana is bearish? No, on the higher time frame, you're not going to be shorting Solana down over here. Up over there, sure. Yesterday we saw some sellers coming in. There was a scalp opportunity for this move up, right? Because this move up did take us into key inflection area. If you look at Sol, that move up yesterday on the daily did take us to a key inflection area and we rejected. So key levels were there, right? But on the higher time frame, if you take a look, you have this really massive trend line, right? What was once resistance, support, and then for now is support, not resistance, right? If you get a clear sign this is resistance, then you'll be able to short this back down to 133 to 126. In fact, we probably have wave structures taking us down there, right? So yeah, there you go. You've got a potential shock taking you to the 1.13. You'd have that 0.886 as well. Let's see. Yeah, 0.886 of the shock would take you to 139, right? So we have wave structures taking us down there. It's not like we don't, right? But you also, another reason you're bouncing off this particular area is the current impulse, right? The current low to high, you're at the midway point of that, the impulse. The mid of the current impulse, you're holding a support. So again, that's another factor that's affecting it for us. But that is Solana. Okay, so Solana does have more room for downside if it wants to, and you're not going to flip massively long until you reclaim some of these levels back into support, right? But you're not going to market short where we are because you are at the retest of a very, very important trend line. Okay, so resistance, support, resistance, and now support. But I would want to see that wave structure complete, right? It'd be nice if we saw a drop on Solana here, honestly. Let ETH do its thing, right, while Solana breaks down. In fact, who remembers this? Key alts plus pairings. Who remembers the Sol against ETH chart that I put for you guys? Hang on, is this the right canvas for this one? No, it's not. It's in this one. So if I go on to key alts plus pairings, who remembers this? ETH against Sol. No, Sol against ETH, right? So we talked about how, firstly, ETH against Sol had hit the 382 and the 2.618, So we can't be surprised by ETH starting to outperform Sol. But also, if you look at Solana against Ethereum, who remembers this? We talked about how you've hit a deep crab against Solana against Ethereum, right? 886, 1.618. We talked about the distributive structure that gave us the initial leg down. You went back up, which was another harmonic, I believe, right? Because I don't know why some of my drawings are disappearing, but I was looking at this. So if I was to go to the daily here, that looks like a W shape. That looks like a bat. Is that a 6 or a 5? I'm blind. That's a 5. Okay, this is a bat. There. Not quite an 886, but very, very close to an 886, right? So here's your 0.5. There you go. So for all intents and purposes, you've hit that bat, right? You've hit that bat. So you created a macro bearish structure, and now you've hit another bearish harmonic, and that's taking it down to the original T1 zone. So Solana looks absolutely ready to underperform against Ethereum where we currently are. And of course, we might see some more chop before a true breakdown, right? But just understand, right? As Solana was the darling so far, yes, but it's not going to remain the darling every single time. There is going to be rotations. Okay, so if ETH gets a spike and Solana doesn't get a rotation, this thing can drop to T2 very, very fast. ETH will be outperforming Sol. Does anyone remember this chart where we went over it originally? Because that one's been speaking volumes, right? This 1.618 and now the bat as well, like absolutely beautiful. Yeah, that one. Trading rainbows. No, so the one that Rai put on his screen, the one we're looking at, that's not volume profiles, okay? Common mistake, but that is TPOs. It's showing you something in a similar manner, but completely different application. So this right here, again, we will all get into this because you're all going to be doing advanced. But this right here has nothing to do with volume. This is now simply time. Every block you see basically is a 30-minute session, okay? So it's simply showing you, okay, at what price range, how much time have we spent at each session? And this falls on the time price opportunity, right? This is a concept. If you aren't familiar with this, this is a concept most people don't think of. So we'll do this in due time once we get to this session. Don't worry about it. You'd have a volume profile on the right, for volume along with time. But this on the left, that's a TPO. Okay, very, very powerful, very, very slept on. And I wouldn't be surprised if you haven't heard of it before or seen it, know how to use it, etc. Hardly any people use this, right? Most people don't even know it exists, yet it's very, very powerful. So that is this. Let's move on to that's Sol against ETH. So another reason why I think ETH can do well, that plus the fact ETH against BTC looks absolutely ready to go. ETH against Sol absolutely going, already broken out from the trend line, right? Absolutely send this up to the 886, please. Above the 886, the 1.13, right? There, or still it would be within ratios, right? This would literally be within ratios. So yeah, send it up, honestly. But yeah, so Solana against ETH, so that's the major stun. Okay, that's the major stun. Does anyone have any questions so far before I move on? Link, yes, let's take a look. I think Link looks good. I'm in from the original entry we had. I put this in the Weatherman chart dump area. Let me see, which one have I got it on? Is it Focus V2? One sec, let me check. We had a really nice bullish bat on this. That's all I needed to know. There we go. This was given in Unity, but I was saying like, don't take this if you don't want to be stopped out. Risky entry. Our entry was down over here, right? This 886. So bullish bat on Link. You know, used to be a godly, now a bat. Very beautiful area. You've rejected off the T1. So could we get a type to return? Sure, right? Have we completed a wave structure? Looks like it. Looks to be a 618. So that's a deep godly by the looks of things. Yep, that's a deep godly. So if we do this, from this low to this high to this higher low over here, 618 is right over here. The 886 is right over here, right? There's your deep godly. So you have 886, beautiful, one sec, and a 1.618. I'm just gonna write deep godly 0.886, and just below that we also have the 1.618. So I'm gonna have to do this. I'm gonna have to put this on top, and I'm gonna have to put this on the bottom. So just one sec. It mocks me, bro. It mocks me. It never gives me the ratio I want. It goes like up and down by 1. Come on, give me the 1 point. There we go. Okay. There we go. There's the 1.618, right? And settings, Control V, that's the coordinates, and this would be your deep Gartley 1.618, and this would be at the bottom. So very nice PRZ. If you're going to take a trade on Link, would you do it where you currently are? Let's take a look on the daily. Any reason to enter here? You don't really have good risk management here in terms of leverage trade. For spot, very easy to manage. In terms of leverage, especially if you do high leverage, a bit more difficult to manage. So what I would do is watch your position size. You could try something like this for Link, right? This assumes that, of course, we're not going to breach that low. If we breach it, then we're just going to get a type 2. We'd have to enter basically back down at these lows again, I think. But maybe that sends us up to the 618. Something like this. Something like that you could do on Link, bro. Yeah. Would be a 11.88 RR trade if it hit, right? But if this is lost, then you could cut early if you see this turn into resistance, right? So let's say you start closing below this, and on the like the lower time frame, right, you start seeing this turn to resistance. You can just open a head short and just cut your position, right? Simple. Just set some alerts up for this region basically for Link. But I know Link looks good. Higher time frame, that looks good. This is why, again, this is the reason I'm saying I'm million spot. You can see these things can pull back if they want, right? Which I just can't be asked right now at this particular area, right? I can't be asked with low time frame trading. It's going to be choppy. I would rather just higher time frame trade here, because now it's at the point where, like I said, if Link goes from even where we currently are, right? Let's say it drops down to somewhere around here, puts a high low in. Even from there, if it goes to T2, that's still going to be somewhere around a 2x move. I think these highs get taken out. That's already been taken out. So I would honestly, primary projection, I think, would be completely valid, right? 257%. I'd rather just at this particular moment in time now position myself with size to be able to secure that without getting chopped up than be stressed out on a lower time frame setting, right? Don't get me wrong, I will once again scalp more rigorously once we're off the lows, because after that point I'll already be positioned in spot, especially once I start taking profits off things. I'll have loads of free capital again. Then yes, scalping all the way, because the volatility will be there at the right side of the market, right? But right now, I think spot's the way to do mainly here. That's just my thesis. That's just the way I've positioned myself, right? You don't have to agree with me. You don't have to do exactly what I'm doing. There's nothing wrong with leverage trading here. I'm just saying it would make more sense, in my opinion, to be spot focused here, or even like swing, right? Like 2-3 axis isolated swing focused to go to the upside. Now, there was someone, is Mad Villain in this stream? Just check in. Yeah, see you later, so bro. Okay, he's not, but he asked me a question. So, bro, Mad Villain, if you watch this recording on later, to answer your question of how do I position for a leverage trade, right? If it's a swing, you can do this cross, you can do this isolated. It does not matter. What's important is you have a cutoff. Okay. Again, it doesn't matter whether you do isolated or cross. It's completely up to you. What's important is you manage your risk. So, for what you do is, let's say you have a moment like this, right? Let's say you want to enter Link here. The first thing you ask is, if I'm wrong, how much am I wrong by? The answer is 5.28%. Okay. Again, some people think, that sliding that leverage meter is going to make a difference. It's not. Okay. Leverage is not important. You can do 1x isolated. You can do 200x. What's important is how much position size are you riding in the trade. Okay. So what you need to do, right, is you need to calculate how much dollars, okay, how much dollars are you willing to risk should you be wrong? Should your stops hit, how much are you happy losing? Okay. Once you've calculated that, you have a position size such that should price go from here down to there and you get stopped out, you lose exactly how much you want to lose. Okay. That is how you do your position sizing. People don't seem to get this. People just position size randomly, right? Your position size is entirely dependent upon how far away is your stop loss. Because you can't just enter a 100k trade, right? If your stop loss is 100k position size, for example, if you know that you're not willing to risk 10%, right? Even on a 1x trade, if you know you are not willing to risk 10%, then you wouldn't enter with 100k here, because if you are wrong, guess what? You're going to lose 10k, right? Even worse if you're in leverage. Now, if you got 100k on if you got 100k's at 2x, let's say, so your 200k position size, then that's going to be 20k lost, right? And you have 80k left over in your account. So your position sizing is entirely dependent upon wherever your risk management is, wherever your cutoff point is, how much are you willing to lose should that point get hit? Don't focus up over here, because dollars will be made. We know that. Everyone knows that you're going to make money should it go up. What's important is not that, not getting sucked in by this, but rather staying vigilant and always keeping this under control. This doesn't matter. That is simply a byproduct of managing a risk at the right areas. Okay. What's important is you do this properly so that should you get stopped out, you're not all of a sudden like losing an entire foot. Right? Again, you want risk to be minimal to yourself. So your position sizing should be such that should your stop loss hit, how much are you willing to lose? That is it. Very, very simple. Okay, that one's for you, bro, Mad Villain. I know you're not here right now, but when you watch the recording later, yeah, hopefully that answers your question. But yeah, that's what I got for link, bro. So after link, what do we have? Let's take a look. Let's just spacebar through some of this. So let's go to focus first. Again, Aptos. Just going over the main ones, right? Since last stream, we've hit the levels we talked about. So we talked about these levels last stream. For example, we had a butterfly here, right? 786. I don't know why that's moved. Let me put the 786 down. 1.272, right? We talked about these areas being hit. We just about front round that 1.272. Right? It was a 1.261. If we get one more flush down, which again I'm completely fine with, then this is the level I'm going to be eyeing. Right? So there's the Gartley 786. There's the Gartley 886 right over there. Where has it disappeared is the question. So I've put the levels down, but I seem to have lost the... Did I do it from here? Yes, I did. Okay. 786, yeah, 886. So those are the harmonics you're after, basically. Right? If you get one more flush, honestly, I hope we do. Get those flushes not low enough where people think we're breaking down, but just one more flush, make people think it's over, give us a nice double bottoms, and then after that, just like, you know, absolutely send it, right? That's what I'm hoping for. But that is Aptos. Would you do anything in this range? Lower time frame, you might be able to scalp. A higher time frame, no, not really. Right? If you want to layer into spot, honestly, like at this point, I don't even care. You could just slowly layer into spot instead of going all in here. But the main thing is surviving, right? If you start turning this to resistance, then you can cut your spot back if you want, because then you might be able to just buy higher at the rate of the lows, basically. Right? But if you want to play a tight range with your spot, you're just going to be buying anything between here down to this range. If this is lost to resistance, layer out a spot, open a head short, and when the head short goes into profits, close the head short out and just move it back into spot over here, DCA in, and just enter whatever you closed back in over here again, right? But that's Aptos. Otherwise, you know, I don't even know if we get that low, right? There's no guarantees we go and absolutely flush. We don't need to flush every single low before we go up, right? So that's Aptos. I want this to go and reclaim that high. I know this hasn't been a 1.13 yet, so we haven't hit the extension of the bat, but I am now interested in what I'm wondering whether if I turn these off and I turn, let's go to the bat, not the shark. There's the bat, right? Have we hit a 1.13? The 1.13 would again take us, like if we were to hit the hop of this bat, basically, it would basically take us to a rate of the lows, right? So, you know, if we lose this level, then yes, we might be seeing this lower zone. But until then, in fact, let me just go and put that level down. If we get it, then I'll just add more down there, right? I'll have head shorts open, and over here, if this is lost, we'll add more down there. But 2.891, if the entire range is rated on Aptos, then that's the area where I'd want to get a spot next. This is your bat 1.13. Again, for those of you not familiar, this is called the hop, okay? The uppermost extension levels for these harmonics. So let's move that to over here, there. Okay, so that's Aptos. But for now, like I said, you know, for now, the area you want is this. And you know, if you enter here, don't go all in. Like I said, save some for should you like go and reclaim these levels into support, or should you get these flush, right? Going all in is completely up to you. I will not say don't go all in, because I can't tell you what to do, right? You might have a strategy that involves you going all in, but just understand basically that this is your, for now, your risk, your cutoff line. If this is closed below, right, you lose this as support, because you can see every single time we have been above this. We don't want to be below this. Even last time we attempted, you closed above, okay? So we do not want to now come and start closing below. That would be a severe sign of weakness. If you do that, then, you know, That'd be the trigger point. Even if you go all in or you decide to DCA, it doesn't matter. I'm simply giving you where you would invalidate the trade. That'd be over here. So that's Aptos. AVAX. We've hit the levels we drew on last session, right? So the Gartley 786, we've hit the first one. We had a dive into the red box, what used to be a daily buyer zone, right over here, right? We've dived into that. It's held for now, but again, would I mind if we get one more flush? No, right? I'd love it if we get one more flush. Maybe something like this, right? Some sort of cumulative structure to come in over here and then go up. I wouldn't mind at all, right? But we have hit the first target. Okay, that 786 has hit. We have got a nice reaction of it if you look at the hourly. We even got really nice lower time frame entry models if anyone wanted them, right? Over here and over here, two different entry models. This one's the one, this one was the money maker. Retest, and then candle was above, you put your stop loss below, just put it below the range, and risk to reward first, risk to reward of 3. Did any seller step in at risk to reward of 3? No. So if no sellers are stepping in, I'm not taking profits. I'm just going to wait till sellers step in. And what we've done over here, we've gone into an area that had gave a level high before. Sellers have stepped in. So my first TP, if I had taken this trade, which I didn't, okay, would have been at 5.12 RR. Right? And after this, you put your stop loss to break even if you're trying to scalp to swing it, which is what you should be doing, by the way, like I've been saying, at these lows. Scalp to swings should take precedence over just normal scalps. Because if this does happen to be the low, then you're not fully closing is going to make you a lot of money in the future, right? But after this, it's like, the trend line is basically what I look for. But in this case, I just noticed you do have a supply zone there, right? Impulse, consolidation, impulse back down. You went to the mid of the supply zone pretty much, and that is where you topped out. So that would have been a nice trade. I didn't take this, right? I'm not, like I said, I'm not even paying attention to the lower time frame that much right now. I didn't take it. But the opportunities are always there. They're always there, right? Especially at these completion of these wave structures, like the opportunities are there. So good. But that's AVAX. Many of these are extremely, extremely nice, right? They're looking very, very well. And it's not just the fact of where are they. It's more of the fact that it's in context, right? So why does this low look good? Why? It's not just because it's at a random wave structure. No, that's not the reason why this looks good. This looks good because of the structure that's been built up over the last 5 years. Remember, XABCD, that D886, we're above it, right? You have had your T1 move. You've hit your type 1. You've hit your type 1 target. You've had your type 1 reaction. You've hit your T1 terminal 1 bar, right, the 382. And now you've come for a type 2 retest, and this is why I identified in September. I gave you guys this entry, right? That gave us that second move up, right? Which then sent us back down. But again, even in this lower low that's been put in, we haven't gone and breached that macro 886. We haven't. It's still support. So this is still a part of ongoing type 2, right? This is just a type 2 that's led to a consolidation. Eventually you will get, as long as we do not breach the lows, right? Eventually you will get your type 2 reaction. And that's going to take you towards the 61.8 for this. Right, so my target right now for AVAX is anywhere between 81 to 94. After this, if you get anything higher, I'm happy. But I'd be happy if we got here, right? If I see weakness there, I'll be taking some nice profits on spot, right? But not only that, when we actually got that move down now, right? We did so with again a wave structure. You had a deep crab, the 1.618. Right, the 2.618, the deep crab support, and you had this SFP. It made it look like we were losing just to reclaim the 886 again. So even if we were to get a pullback here, right, as long as you're above the 17.53 level, AVAX is still within its type 2 return for that bigger wave structure. And as long as it's still validating that eventually, if sellers cannot break us down, eventually the sellers are going to be absolutely exhausted. Buyers will take us higher. Markets always work in cycles. Okay, you're not just going to have sell, sell, sell every single time, right? It's not going to work that way. So, this is AVAX. AVAX looks beautiful. Even like as a for your scalp the swings, right? For more for leverage. Like obviously, like I said, have a swing / spot account. Spot account, have a swing account, and also have a trading account, right? That's your scalp. That's your scalp the swings. On those, you will be taking more active trades every time you get to these targets, so that you don't get the urge to just go and fully close your spot back just because you've gone to $30 from 17, right? Because taking profits too early is so painful. Just trust me, okay? Yes, getting stopped out's painful, but what's more painful is taking profits way too early to then watch your amazing entry absolutely run to like multiple X's the target that you closed for, right? So that's why to scratch that itch of, oh, I should take some profits on my resistance, have a trading account alongside it. Do not touch your spot. Okay. I'm not telling you what to do. I'm telling you what I'm going to do. I'm not going to touch my spot until I see macro distributive structure once we hit these higher targets, right? Because my thesis is now, let's take all of these out. Look at all these, like, these are all now shorts. These are all people that have sold some short entries. We need to go stop them out, basically, right? Like, liquidity is not to the downside anymore. There's way more money to be generated to the upside. Because how many people do you think actually got in here? Very few. Very few people would have got in here compared to people that would have been trading at these levels, right? So yes, you can argue there's liquidity to be taken to the downside. Of course there is. However, in terms of amount of liquidity to be taken, very few people would have got in here, right? Compared to the people that have now had the time to trade this market over the last few years at this higher range. There's more going to be more liquidity to the upside than there is to the downside, in my opinion. So AVAX, another one, looks amazing. I know I'm going over the same coins each stream, but that's because I want you guys to understand you are going to make more money taking focused bets than me looking at 15 different random shitcoin charts every single stream. You're going to be completely lost if I give you 10 different charts this week and 10 different charts next week and 10 different charts the week after. Which one are you going to take, right? It's going to be like analysis paralysis. It's like if you've ever, like, when you take your pet dog to like a dog park kind of like sort of thing, right? And you draw them into the ball pit, they go absolutely like paraplegic because they're so overwhelmed. It's sort of like that, right? You just don't know what to do. When you're met with too much options, you take no option. It's paradoxical, but that's what it is, right? That's just how humans function typically. So ultimately, as long as this holds on AVAX, we are 100% completely fine. Okay, I'll be looking for higher prices. And if you get that blow off top scenario, that's going to start soon. Say the next one, very, very similar to AVAX. The last lower high that led to the lower low, if you look at the daily, right there, that's been taken out. It'd have been way nicer if this had been taken out as well, right? But it didn't. It's what it is. The last lower high that led to the low has been taken out, however, right, on the daily. So let's use our best friends. So the golden pockets first. For now, the high, that shifted trend is here. So we're going to need, I don't want to just hand the ratios in a silver platter to people outside this group, so I'm just gonna do it this way. Where's the box gone, bro? Come on, man. Okay, hang on. Here, liquidity rates. Here, so liquidity rates. Basically, we're gonna get that deep value by the look of things, right? Either we want that deep value or we want that reclaim here, like this. But you want to reclaim that 702, 707, right? So if that's the case, if you look at deep retracements, here we're bouncing off the 764, 786. Even one more drop on, say, I would not give two shits. As long as by mid-June we've done it, we've got intersections there, as long as we're holding it, and we reclaim by end of June. If we see this by end of June, just understand we are going to absolutely blast the fuck off. Okay, if we get anything like this, that'll be absolutely a phenomenal price action. So intersections are laid out there back to back. So but if you get above the shark 886, you can look for scalp to swing longs to the upside again, right? Right now I wouldn't do that because you're just below that resistance, of course. I wouldn't long nor short here because you're compressing very tightly within this, right? If you take a short, you might go here and do this. If you take a long, you might do this and then do this, right? You're going to get chopped high either way. You want to enter at just very, very opportune areas. This right now, even though it looks good, it's not an opportune area just because of that diagonal. But say on the otherwise, you've shifted trend. We're just waiting for a higher low. That's it, right? Once the higher low is confirmed, we just go. Right? Say is another one. Say I have very, very high hopes for this one. Okay. In fact, let me look at some Bitcoin pairings for say. So if I go back here, I should have say here, no? Why have I not got say here is the question. What's wrong with me? Okay. Let's do this. Let me go back here. Let me add say to key alts plus pairings. Okay. And then after that, add section. This is going to be for say. I don't have SWE either. What? I had these. Where have they gone? Trading views fucking with me. I swear to God. Right. Say. We'll have say against BTC, which I don't expect to be the strongest right now. But let's see which one has the most data. Upbit. What the hell is that? CoinEx. Whitebit. Let's take a look. You just want bottoming structure. 1, 2. Okay. Binance over Bitfinex any day. Okay, Binance still. Nope. Nope. Okay, so say BTC. I want say against ETH. So if that's not going to give me, let's do say USD, ETH USD. So there is say against Ethereum. Promising. We've got M shapes, all of that. This might actually be down some. If ETH takes the lead, we want this to go down. Okay, so that's fine. And last but not least, here's the secret sauce. You want say against SUI. Okay, because I'm now starting to compare everything against this. And it's been historically that say runs, SUI runs, basically. If SUI runs, say tends to follow, right? So say against SUI. These are the ones I want. So if we take a look at this, for example, I don't think say's gonna bottom out against SUI yet. It might have, it might not have. But what I'm interested in is say BTC to begin with. This has completely broke down. Have you hit the 1.13 close? I don't think that 1.13 is gonna hit, to be honest. So let's do this. Let's redraw this, okay? Do we have anything on the yearly? Yes, we do. So this started on August 2023. So I'm not going to count 2023 as a yearly. That's going to be a 4-month candle there, basically. But this one here, previous cycle. Here is your seller zone. Here is your macro read, right? And what we do have here is your let's go on to the monthly. Just do this. That's your all-time low in terms of the monthly. You're below it. So right now, obviously, say does not look good against BTC whatsoever. We're not surprised. Alt season hasn't started yet, and it's very much still a Bitcoin heavy market, right? That to me looks like an 886, and if that is, do we have? Oh, come on, bro. Hang on. There has to be an 886 there. There's no way. There we go. Perfect. 886, 886, right over here. Yep. So 1.618, there we go. Right, we have a deep crab right over here. So first things first, let's go and put that down. Deep crab 1.618, and the hop for the deep crab is the 2.0 if I'm not mistaken. Okay. So you know, this can go to the 2.0 and it still be a part of the same wave structure. Just out of curiosity, 2.0 would be way deeper, right? So I'm just going to mark it down for now. In case BTC has one more spike up and there's a moment where alts lag, then this would definitely be a target. Just give me the 0.0, you stingy fuck, come on. There. So we have this. Settings, Control V, and this becomes deep crab 2.0. All the ratios are still intact, so that's fine. Middle. Go over here. Middle. Come, are you middle? Yeah, there we go. Right. And let's actually look at the more macro of that as well. So I'll kind of put that in from the internal. If I do this to this, that becomes your here, turn that off. And now let's look at from this extreme. What do we have from here? So that is a 786, and that would give us a butterfly. I'll pin to exact ratios 1.414. So in fact, we've actually already gone to the hop of the butterfly, and we're below that too, right? So we do need some more strength coming in on, say, against Bitcoin, before this really looks like it's absolutely ready to blast off against it. But those like little pivotal moments, right, where you see you know, an alt ready to outperform against Bitcoin, like, you know, you get some structure, sure, but it doesn't take long, right? As soon as you confirm some sort of a cumulative structure, some sort of bottom, it tends to go because the rotation is just that quick. As soon as you get a rotation, all it takes is for a whale to clip down Bitcoin while another whale to buy, say, and all of a sudden this chart looks so golden, right? So it's just a moment of having your ready, set, go triggers in basically. So 1.414, I'm only going to pin the hop because we've gone way past the actual 272 there. And again, yes, I've been asked this question a few times. Do I recommend Mr. Scott Carney software? I 100% do. The reason I don't use it is simply because when I first started with harmonics, I thought it'd be much better for me to just get into the habit of finding these out myself, pinning them myself. I'm very much a hands-on learner, right? And I've just got used to it now, basically, as you know, I just see these shapes, basically, right? So I don't see the need to get the software for myself. But honestly, like, you know, as a quality of life investment, like, it's more than worth it. It is definitely worth it. The reason I've not got it is because, like I said, I don't feel like I need it for myself. But as a quality of life investment, more than worth it. 1.414. And let's color this something else. So I'm going to make it like some dark blue. There. Perfect. So, all in all, we can see we do really need to get over this. Like, if we reclaim this, say against BTC is going to look absolutely prime. Okay. Now, we've got this sort of double bottom structure right now, right? So as long as we can hold this, like, you know, who knows, maybe it happens within a couple of weeks, right? But ultimately, once that's reclaimed, you have zero excuses to be sat there going iffy about, oh, but is it going to go up or not? Because that's what people were doing about Sol. Don't forget, okay? Do not forget, people were completely ignoring the fact that Sol against BTC was looking so damn good when it was, okay? Because if you look at Sol against BTC, so many people were ignoring the signs down here. But what did we have? 886, bullish bat, double bottom, right? Sort of similar to what Say's doing now in the sense. Of course, Say's losing all structure in terms of, like, you know, market data, but it's mainly about just what's happening in terms of candles, right? Double bottom at the 886, which was also, look at this, right? This is 2023. You retested your 2022 yearly levels and you held it, right? Twice. Then what did you do? Breakout retest. Now, that's only one way for you to draw the trend line. The one I had at this point, the one that I made my bids off, is this, right? You originally had this, and you breakout retested this trend line over here as well, right? Bullish M shape, yearly key levels getting hit, breakout retest. What you do here is you say to yourself, what does the chart look like? If this was a USDT chart, would you long or short? You would long. This is now instead against Bitcoin. So this is one of the rare ones, because the two coins that printed me the most money the first half of this, right? So the cycles are from 2022, apart from Bitcoin, is Solana and Injective, and both of those had amazing Bitcoin pairings before they went. Solana especially. But people ignore this. Like, they don't look at things like this. But you need to, right? You need to. Same against ETH, right? How would you have known to be in ETH rather than Sol? Sol rather than ETH. Well, if you look at the ETH against Sol pairing, no, Sol against ETH pairing. If you look at what that did, right? You rated all-time low. And in terms of fibs, again, let me quickly show you. I'm gonna go. If you go low to high, I'm gonna need 1 to 2, right? If I do that, after you rated all-time low, what did you do? In my system, you guys know what this is: liquidity rate of the range extreme, right? You hit the liquidity rate of the range extreme twice. You put a high low in the second time. Great. Okay, nothing much to do there. We need a reclaim. Did we get it? Yes, we did. There was the reclaim. That reclaim is telling you, right? If you're gonna do anything here, that should be to get your ETH out, get it into Sol. Because as long as you're above this line following the reclaim now, it doesn't matter if it's going all the way to new highs, or it doesn't matter if even if it's just gonna go like partially. There's gonna be a period of time where Solana is going to outperform Ethereum, and that's what we see, right? Now it's the opposite. Like I said, you've hit deep crabs, you've hit bearish bats. Solana no longer looks like it's ready to outperform Ethereum. In fact, I made a post on this literally back in start of this year, right? Saying we've hit the bearish crab on Sol against ETH. We've hit the bullish ABCD 2.618 on ETH against Sol, so ETH looks like it's ready to outperform. And on the higher time frame, what I said was this might take a while. Don't expect a weekly pump, but just understand that from this moment onwards, like you're no longer going to be expecting Ethereum to just keep on underperforming against Sol, right? And so now you're no longer going to be looking at this chart and saying I should rotate everything I have into Sol from Ethereum. You're not going to do that because the chart no longer supports that thesis, right? Sure, you might get a retest that pumps you higher, so on and so forth, but also there's also a high chance that you reject the retest of the all-time high. If you turn the 382 into resistance, i.e. T1, you're gonna get T2, right? It's gonna happen. And that could literally just be Ethereum holding while Solana dumps. It could be Ethereum pumping at a greater rate than Solana is. But in either way, your value is going to be retained better in Ethereum than Solana, right? This would be especially the case up over here. Of course, now you're back down over here. If this is support, we might see some more chop where Solana and Ethereum pop off like at different intervals. But ultimately, if Solana against Ethereum cannot now break out of this, right? You'd be looking at some sort of macro distributive structure. If that came in, then you would be looking for a bigger drop here where Ethereum really outperforms. Okay, so there is your distributive on the macro now, right? Not just on the weekly, but even if you look at it on the monthly. Initial resistance at 2024 high, massive rate on liquidity. So now if you can go and reconfirm resistance once more, that would give you the ultimate distributive structure on ETH against Sol. And I'd look for a serious more drop down. If this is not the one where you get the move, a bounce to get that sort of distributive structure would be absolutely fantastic here. Right, but this is basic stuff, right? It should be basic stuff anyway. I'm sure it is not for many people, but looking at ETH pairings, your BTC pairings, things like this, you still need to be doing this, okay? Before you even think about pulling that trigger on the USDT pairing, there's a lot of charts you need to consider. USDT dominance, the Dixie, Bitcoin dominance, Ethereum dominance, right? The Bitcoin pairings. Like, people think it's as easy as just, I'm going to wake up today, I'm going to open the charts, and I'm just going to randomly pull the trigger. But you don't need to look at this every single day. Well, if you want to make serious high time frame decisions, then it's more than just, I'm going to wake up today and I'm just going to buy, right? If you want to really give yourself as much of an edge as possible, then look at all these things, because these are all confluences, like painting the bigger picture, right? The whole canvas. But yeah, so say as long as we can retain above that white box, say is another one, fantastic, right? Like I said, many coins, and that's the reason again that I keep going of the same coins. If you guys get bored by going of the same coins, do let me know, right? I can look at other ones as well. But again, the reason I'm doing this is because you do not want to be putting your attention into a million different things right now, right? Just do some focused bets. That's the reason I keep going of the same ones. The ones I go over are the ones I believe have the best shot at doing well, right? AVAX, Aptos, Say, Sui, Trump, Ondo, Hype, Doge, PAL, and there's a few more. ENA, right? ETH betas, LDO, OP, GMX, so on and so forth. ETH against BTC, right? I mean this nicely. Anything to do with Sui. Rather just focus on a few select like that, and then just spread your ports somewhere around there. Maybe a couple memes, right? Farcoin, Fork, so on and so forth. Pepe, derivatives of these. But apart from that, everything else, sure, you can you can look at these, but only start doing all your high intensity trading after you've built your main bag, right? Your spot's going to be your driver, right? That's going to be the driver, because once we go up, if you're in no spot positions and we go up and say pumps to 2x, right? And then you're met with a 40% drop. If all you're doing is leverage, you're going to be absolutely crying when we start putting price action like this in. Okay, you're going to be crying, because the harder you go up, people think it's easy mode. No, it's not, because I just want you guys to go back and see what kind of chop you've experienced on the lower time frame when things really pump. You think it's bad now. Once you get a 50% daily candle and you get a 30% retracement before getting another 40% pump, do you really think you can handle that? Right? And it's fine to try and trade that as long as you have your spot bags there to drive value up. If you're completely sidelined, you're going to have a hell of a time. Okay, I'm telling you right now, you're going to have a very, very hard time trying to even outperform the simplest of coins, right? Which is why I'm so heavy right now, and I keep emphasizing what I'm doing. 80% spot, 15% swings, and the remaining 5% to fuck around with. That's it. I will increase the scalp percentage again once we pop off the lows, because I will no longer be looking for spot entries once the lows have gone, right? And then after that, yes, it's back to more regular trading while spot just does its thing until macro distribution comes in, basically. But at these moments, I'm just focusing my energy where it needs to be focused, which is, in my opinion, again, higher time frame plays. But yeah, that's Say, right? Sui, again, as long as these lows are held, you're completely fine, right? If you start turning this to resistance, that's when I think you get a bigger drop, right? Maybe this fair value gap, right? Or maybe back even towards 236. But we're only going to talk about those levels once this is lost with conviction. Right now, it's tethering, but it's not doing. There's a difference, right? Trump, again, I do have some Trump. I think it's a no-brainer. Like, we have President Trump in office, right? It's a 4-year term minimum. I could be mistaken on that, but it's holding the 886, right? This bat, which seems to have eluded many people because it's not there on the higher time frame. You need to go on the lower time frame to get it, right? So I put this down literally as it was happening. The whole reason I got that short around $63, right? What I did was because I saw, okay, we have a retracement. We hit the we had a weekly like buy seller zone here, not weekly, sorry, daily. We had the seller zone pullback, right? So current cycle. There you go. We hit that seller zone on the daily. We rejected the seller zone on the daily, most importantly. And therefore, now I have a very nice area where that lower high might be in. So as soon as I see this, I was ahead short, right? And then I'm thinking, okay, well, that's pretty much a 618 retracement, right? After a 0.5. So what is that going to be followed up with? An 886. When we eventually, we did get that 886. Right, and you know we went below it, put some AMD structure in, and then popped off, reclaim, right, got to move up. So as long as we're above the 886, like, you know, I'm going to be in some Trump. If we lose the 886, I'm just going to get out of Trump until we either get to this box or we reclaim. Okay, it's not going to be much of my portfolio that's in Trump, just a little bag in case President Trump decides he wants to like send this thing to new all-time highs for whatever reason. Never say never, right? Once things get absolutely parabolic, like, you know, anything can happen. So it just makes sense to have this here rather than wait for news to come out. You know, this goes all the way to resistance and you start looking for entries at $28. That doesn't make sense, right? Ondo, beautiful. Have we got our PRZ1? Our old PRZ1 at that. So let me take a look. Ondo, no, we haven't. Would I enter Ondo here? Hell no, I wouldn't enter Ondo here. Okay, why? Because again, if you can enter spot if you want, but this is more so to really to put you guys into the habit of really making sure that you enter when it's right. Okay, if you enter here, no matter how you look at it, you're entering just below resistance, right? This is all consolidation highs, you're below it. If you're gonna enter, even if it's spot, I don't care, just wait for that flip, right? Your entry is gonna be literally the same pretty much for spot, right? But you have a way better entry above this than below it. So either wait for that flip to enter more Ondo. If you're not in, you should already be in, you guys, because I gave this is the first all I gave, right? When we hit these PRZs, this is the first one in the old section. But if not, then I would love to see a cumulative structure again, smiley face come in, back at that old PRZ one, right? That 886 of the bat, the 2.61 of the bat, and the 886 of the shark. That one PRZ, that was the initial reaction. If you can put a smiley face in there, right, meeting up with that 0.94 fifth speed resistance fan from this low to this high, then that would be amazing for Ondo. If not, then you just wait for that flip and you just enter there. Very easy, okay? Very self-explanatory as well. You guys know how to do this by now. Delete that. But yeah, it's hype. Again, I wouldn't do anything for hype over here. I'm hoping, actually, what I hope is we get this. Right, if you go to the 4 hours, what I hope is we get this, like, you know, Garley to deep Garley sort of structure, right? Because I'm not going to enter here, right? We entered this on the scalp to swing at $9.90, and on the swing my average was 10, right? Levels were given beforehand, the entry triggers were given beforehand, we hit it, right? So there should be no reason why no one's in this unless you guys just didn't want it in your port. We took half off the swing when we went and we raided this liquidity rate of the range extreme. Okay, again, another live example of never ever trade the range extreme itself. Okay, it's open to so much manipulation. Front run, liquidity rate, right? Back down, liquidity rate, back up, liquidity rate. You're just never going to get a good entry at a previous wick. Okay, however, now that we've gone and put another lower high in there, for now, right, we might go up once more, have an 886 drive, but you know, for now it's just to that wick. 786, so I'm going to go and put this down, one sec. So that would be your Gartley 0.786. And if that is lost, I would then be looking for a deeper pull to the 886 for a deep Gartley. Okay, specific scenario here. Deep Gartley 886 would take us somewhere in, come on, in this area. There. Otherwise, I'm not interested in adding hype over here. People keep asking me for entries. This is what I mean every single time, bro. Like every single time. People always ask for entries. I give them entries, right? Good entries at the lows. I tell them, oh, I'm going to enter like this. This is my invalidation trigger. No one pulls the trigger, right? And then after everything's pumped to new all-time highs, all of a sudden everyone's interested in an entry. Like it's just no risk management here whatsoever. So I'm just not going to give an entry here. Right? If you get this pullback, then sure, you're buying at value in the local range, right? But where you currently are, just leave it, honestly. There'll be better things now in terms of moves, right? There we go. So that's the deep Gartley and the Gartley. So that'd be nice if you got it, right? So hit the front run of the golden pocket maybe, and then send it from there towards our higher targets. We know there's an ABCD higher, so let me get rid of the fib retracements for now, right? We know there's an ABCD higher here somewhere. Where's it gone? Oh, it's in this chart. Yeah, so go to the ABCD, right? That'd be nice. 1.272786. That'd be beautiful to see. Let's see. Do you guys have any questions? Let's check back to the chat. Circle, yeah. Say's gonna be doing that. I think Say's a part of that. No problem, bro. Rohan, catch you soon, man. We'll look at ENA too, bro. Yeah, we'll take a look at that. There's also a is it this one? Circle. There was I was doing a stream in Unity when someone put it was a couple weeks ago. You know how like BTC has Michael Saylor, right? There's someone out there like saying they want to launch something like that for ETH. Like, I don't know. I don't know if they're like going through with it or not, but like launching something like that for ETH basically. I think it's gonna be like 500 million. They're using to look at the race to just buy Ethereum. So if that happens, that ETH's gonna absolutely pop, bro. Honestly, ETH's gonna run. Yeah, sure. Let's look at that. Let's see. USDC. Yeah, I know the EU is going to be going towards that, isn't it? So I don't even think you can do USDT on Coinbase anymore, if I'm not mistaken. In the UK, USYC or EURC, bro. Of course. That's kind of crazy, to be honest. Yeah, sure, brother. Cosmic. Okay, so yeah, bro. No, 100%. It is. It's whack. Beautiful example, by the way. I know I've went over this before, but this is why I keep telling you guys: don't blindly aim for the 618. Okay, if your trend is true, shallows where your price action is gonna be. Look. Remember the tip and trick? I'm not going to say out loud just in case. I don't want to give all the source away on YouTube, right? But you remember the trick of what you're doing, right? The only way I tell you guys is valid for you to take diagonals for this part of the wave structure, not the last, right? Well, if you do that, look, 3-4 to 382, 4-on-4 max. Shallow retracement, shallow. Did not give the deep whatsoever since the trend shifted. Beautiful, right? The absolute troglodyte fib traders that always only wait for the 618, absolutely left in the dust. Doge, but still, as long as you're below this, I'd want that 886 if you get it. It'd be nice. Yeah, that's it. And what I'll do is, I think that's going to be it for today's, or rather, in terms of coins. ENA next, I'll look at ENA because that's one of the mains as well. But after this, next stream I'll do, if I have time, I might do one more on Sunday or something, right? No promises if I have time. But then I'll go over more coins that aren't our mains, right? If you guys want, if you guys have any requests or stuff, we'll get that sorted then, okay? But let's go to this, and then, of course, LDO and OP, we need to look at that. LDO hit the internal bat 886, insane rally. What can you expect? Is what it is, right? Insane rally from LDO. And then OP, still holding the yellow box turning to resistance for now. But as long as, again, we maintain the yellow, we're fine, right? Even if we go down to that butterfly 1.414, we're fine. We just don't want to lose this general structural area over here. LDO definitely looking stronger than OP right now, though. But again, what did LDO have that OP didn't? OP does not have weekly bullish divergence, if I'm not mistaken. No, it doesn't, right? LDO does have weekly bullish divergence, lower low in price, higher low in RSI, right? Not just in RSI, but also in MACD, weekly bullish divergence. So That's how deal. If he makes another lower high here, then I think we would probably get a deeper flip, right? But this is why you just didn't spot, right? You can trade this if you want, but unless you're absolutely confident, you can trade, sell, get out, and eventually catch that low before everything pops off. I would not miss. I wouldn't miss having a decent sized position here from the lows, right? ETH-Fi. Now this one I'm really pissed off about, okay? Because this one, I was in a stream with my boy Hoff. Now I don't know if you guys know him. Some of you will, some of you might not. But I was in a stream with my boy Hoff ages ago, and I remember putting this down. Okay, I remember saying, look, we have a 382. We should get the 2.24 at some point. Okay. We got that 2.2. Not only that, I also said we have a 786 and a 618. I had all these PRZs out, but guess what? My Achilles heel is no alerts, right? So I did not realize that ETH had hit that level, and literally only realized the other day, which sucks because that would have been a absolutely amazing entry for spot on ETH, right? It would have been. But no matter, so if you get like a flush to the downside, a high low somewhere here, I'll look to enter there. Maybe we get one more flush with bullish divergence on the weekly, right? I could see that RSI, MACD bullish divergence. I really hope that's the case because I'm pissed. Like I drew all this out and then just missed it, right? That's what it is. Otherwise, I'll be looking for some scalp to swing mindset trades at the flip of 2024 yearly level, right? That's it. Because you can see anytime you flip this, chances are you're going to go towards 2024 high minimum. So there's that. But yeah, this was a beautiful PRZ. I completely missed it. Like it was literally in my list as well. I just never checked it. So yeah, don't be lazy traders, guys. Just it doesn't take long. Just go there, hit that plus, right? Hit that plus, and just set the alerts up. Honestly. But yeah, that's that. Cetus. Maybe we get that shark. Maybe we don't. I don't care. I'm just gonna be holding spot. Deep. Looking at this, we have a 0.5 for now. If we reject off this box, we might get a deeper 0.618 or 707, something like this, right? I hope we do. If not, we know this 0.5 is in at the minimum. So again, if that is the low, then we could get a 0.786 first. That's your Gartley. But honestly, I think we go higher, right? So you have a deep Gartley at the 886. And the beautiful thing comes in when we now start looking at, actually, no, that's going to be way too deep. So to do this properly, we need this deeper, right? For this to be turned into a nice crab, I'd want one more flush down towards like the 618 or something. Because even if we just got the 618 from here, right? So I'm just going to pin it to like this, basically. These ratios are now much nicer. Right, so when we go to the 1.618, all these ratios are valid. So there, 3.618, 1.6. If you get that 618 and it holds, honestly, like deep could be an absolute cook from here to here. Right, 11 to 53. So when one of my students brought this to my attention, the move had already happened. And the reason is the move isn't random either, right? There was harmonic confluence with the move. I'll show you guys, we had a amazing bat for the move. There you go. Pretty much an 886 at the lows. Right, there you go, 0.88. So we had a really nice bat, but my student only told me about this after we basically like hit the 0. Hit past the B point, past the terminal 1, but terminal 2 even I think we went past. The client only told me basically after we hit T2. I can't do anything here now, right? So now we're waiting for a re-addition structure to come in, patience. So for now we're still treating this resistance until we get above. We're going to assume that we can have one more drive lower. But if you go and flip this back into support like this, then we have to consider the fact that, okay, the 0.5 might just have been the low, and then we try to play it to the Gartley, the deep Gartley, so on and so forth, right? But yeah, if we got that, 1.618 drop, like literally, that 1.618 would line up with the primary projection of this as well, right? Because remember, this isn't this. This 1.618 in terms of this move. That 1.618 there, primary projection, that's this, right? So that's a beautiful price target, around 52 cents for deep. So I hope we get that 618, honestly, or deeper, I don't care. But somewhere around that 618 would be absolutely lovely. One more flush, basically. Requesting Sonic for next time. Never see people talk about it, but it's got some old school personalities behind it from 2021 cycle. Could be good. Okay, actually, while you're here, I've got a little bit of time, so let's look at Sonic. We'll look at it and then I'll end the stream there. But that's sweet. ENA, I do want to look at that. ENA hit the Gartley. We talked about the Gartley. It's hit the Gartley. Okay, we went over this last stream. We hit the Gartley, and now we've had a move up. Okay, so trend line bounce. ENA looks good. Of course, it's going to look better above the macro point of control, but it looks good, right? ENA definitely does look good in this area. What you don't want to see is this area turning back into resistance, because then that could give us like a slightly deeper pullback before we go higher. But if you go and flip this into support, like ENA looks so good, like it looks ready to go, honestly. Okay, so let's look at Sonic, and I'm gonna call it a day there. So you say SUSDT, yeah? SUSDT. Do I have it? No. What about master list? SUSDT. Yep. Okay. Nice TA. There we go. Okay. Beautiful. We can just do this actually. Buy seller zone. Anything else in this area? It's gonna be a bit much, but I think it's worth it. We're also gonna go here and do this. Here. So the key level you're currently contending with. In fact, I can do one more thing here. Let's just absolutely lather ourselves in key levels. Macro read buy zone mid. There we go. To the T. Let's make that blue. Lock it in place. Okay, so what we have is we have this range, right? We have 3 different yearly levels in this area, and we had this cluster. I've gone over this with someone. I forget who, but there's another chart I've got of this. But this cluster we can see is very, very important. Just above this is you go higher, right? Below this you go all the way to range lows typically. So as long as you're above this cluster, I think you're good for some positions, right? If you go below this, chances are you visit this range here. So as long as you're above this, you want to reclaim at that. If that gets reclaimed up, is there any wave structure? Is the real question. That's what I'm really interested in. Like in these lows, you typically get some really nice wave structures before you go off. Looks to be a shark. $347. So it's slightly we go. 0.886 is the technically it's a shark down to there, but 0.886 to 2.24 is what I'm interested in this area, and that's going to be here basically. So yeah, you've got the shark that's providing you with support, right? So in fact, let me do this, create a group of drawings and just hide it for now. So your macro shark right over here, right over there, the 0.886 of the said shark is right over here, there. Nice round number. And it's also the 2.24. Okay, so for now actually I'm just going to do this, and it's probably more efficient if I draw it in the same area, but that's going to tick me off. My brain just works in a weird way with things like this. So let's go to 2.24 here. Perfect. Yeah. There's the shark 2.24, and by the looks of things I do believe we have another over here, so that looks like a wave structure we can use potentially too. So if I hide that once, from this low up to this high to this low, 556, not ideal. What I'm thinking is this could actually end up being really nice if we do this. There we go. What we have here then is a deep godly. Okay, 886 is where we're going. There, we're going to the 886, and let me just make this another color. Let's make this red. No, let's make it yellow. There we go. I just realized I've absolutely bastardized that text. Come on. Here, text, black. There we go, perfect. And then this. Perfect. So now if we look at this together, we have this really nice area, basically, right? In terms of wave structure, this is your harmonics. as long as, for example, right now, as long as you can hold this area between 40 to 39 cents, you are holding what was one support back as support. Below this, you get that box, right? So your risk management here is very simple. Now, I'm not promising you're not going to get stopped out if you take this trade, right? But the main thing is, if you want a tight risk management, the option is there. The option is there for a tight risk managed trade. If you entered spot, the more logical thing would be to like account for DCAs instead, right? Unless you go all in. If you go all in, don't DCA. Obviously, just have a tight stop loss. But if you're going to stagger your bids, then you'd be looking to DCA at that lower level, like I was talking about, right? Because we've got buyer-seller zones, that yearly cluster down over there. You'd be DCAing that area if you went in with spot. If you want leverage trade, I'll do it tight like this. Yeah, but there's a high chance you visit this at some point again. So that stands for something too. But yeah, that's S. I think it's it looks like it's going sideways. I don't know if whether to call this a cumulative structure or not. Really would struggle to call this a cumulative structure, to be honest. But nonetheless, I mean, it's better buying here than it is buying up over here, right? So if you, the main thing is, like I said, I don't care how high this can go. The main thing is, how much is it within your risk parameters if you are wrong? The answer is yes, and you like the project, right? Fits whatever narrative you believe in, then yeah, those are the theses for which you would then take a trade based on what I just put down. Hopefully that made sense, bro. But yeah, that's S. So I'm gonna call this here. Mad Villain, bro. I don't think you were here, but I answered your question in the stream earlier. So when I put the recording up, just go to like halfway through the stream. It's gonna be there somewhere. All right. But basically, as a quick summary, bro, to answer your question, which is how do I size up, is going to be whatever you put your stop loss, right? So for example, we go to this long position here. If you decide that this is where you want to enter and this is your risk, right? You don't want to be holding below this. Then you figure out, okay, that's 7.68%. So if you're using leverage, you figure out how much leverage you're going to be using, right? Because the main thing here is you want to have, right? You want your position size to be such that, let's say, okay, so the example is, let's say you have 10k, okay, or rather even easier, let's say you have 100k, right? And let's say your risk is, to make this easy for now, I'm just going to drag it down to 10%, okay, just so it's nicer numbers. Let's say your stop loss is 10% away, right? Let's say that's your max risk, just a 10% stop loss. That means that you are willing to lose 10k, right? That's within the risk parameters, right? The max you're willing to lose is 10k. Therefore, it wouldn't make sense for you to now put the 100k in, but then do it 2 or 3x, right? Because if you do that, you're going to have your initial position size multiplied by your leverage. So let's say you've gone with 3x leverage, right? You are going to have your initial position size multiplied by that. So your position size is 300,000. So when this stop loss hits, that's also multiplied by 3. You're not losing just 10%, you're losing 30%. What's 30% going to be? 30k, i.e. 10% of your 300,000, right? So now you've lost 3x more than what you were willing to risk. So the answer is, at your stop loss, how much size are you willing to lose, right? And you sort out your position size exactly according to that. Your leverage doesn't matter, right? And what matters is your position size. With the position size you have, how much are you willing to lose should that stop loss, in this case 10%, hit? And then you just have a position size accordingly. You calculate that first, and then you enter a position size and then you enter a trade with the position with the appropriate position size, right? If this is your stop loss and you're only willing to risk 10k max, it doesn't make sense for you to enter with a million, because if that happens, you're risking 100k, not a 10k. If that 10% hits, right? Same thing. If you have decent size and you're willing to risk 10k, it doesn't make sense entering with 10k because you're only risking 1k there. Sure, you're losing less money, but you're also underexposed to what you're willing to hold to now, right? So this, depending on your stop losses, then the logical position size would be 100k. Now you can get to this 100k just by spot. You can do 10k at 10x. You can do 1k at 100x, right? So on and so forth, right? But your position size is the important thing. So that's basically what I was trying to explain earlier as well. That answers the questions you were asking, bro. That's what I'm using to determine how much am I going to put in, basically, right? That's it. So that is it from me. I'm gonna stop this recording here, guys. And yeah, if I can, I'll do a stream on Sunday if I have time. If not, if the restaurant's booked, then it'll have to be sometime next week. Really busy right now. So but yeah, apart from that, I'll talk to you guys soon. Yeah. Let me stop the recording here.